Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The FOMC minutes were released a little while ago. Not much of a surprise. We're starting to see the dollar back off just a tiny bit from that session high. You're starting to see some of the treasuries move up. A lot of this comes on a little bit more of a dovish tone than markets had expected. However, we talked about it. We've been talking about it. In fact, we did talk about it in the midday market minute earlier. What the Fed had in that statement earlier this month talked about a symmetrical inflation target. Now, though this is hawkish on inflation, this ultimately is dovish as they're going or willing to allow inflation to run hot. This means they're not going to force a fourth hike this year just because inflation is at, say, 2.3%. Ultimately, though, you're not seeing a tremendous reaction in the currency markets. The euro got smoked earlier today on all three PMIs missing. And, this slow growth argument continues to gain traction from the Eurozone. Now, tomorrow we have the ECB minutes from their meeting earlier this month. This is going to be important to watch, what kind of tone we get from either sides from the hawks and the doves in the ECB, and what they're thinking as this slower growth or potential slower growth takes path. Now, we don't necessarily think they need to be hawkish, or we're going to see a hawkish tone from such, but maybe a less dovish tone than the markets anticipate. The euro has been pretty beat down. The problem is it's now below major three-star support at 117.35. This is a key level to watch. We've been more bullish after this thing has sold off, and as this week has developed, a little bit of bottoming action on Monday, the reversal. It was very encouraging. But this, after today, seeing the poor PMI reads and the issues with Italy, it's just continuing to weigh on the currency. It's a trade that makes it very difficult to stick with. Same thing kind of with the dollar because it's 57 or so percent. The euro, the dollar index has a lot of resistance up here. 94 to 94 and a quarter has been a three-star level we're talking about. But we still like it. Just manage your risk properly and watch the trade closely. Tomorrow as well, we have data, German GDP. Again, those ECB minutes as we get into the U.S. hours, existing home sales. Dudley talks tomorrow, the Fed president from New York. He's outgoing, so people will pay attention to him, but maybe not so much so. We have some other Fed presidents on the docket tomorrow as well. But on Friday, most importantly, Powell, the Fed Chair Powell, he talks. Everybody's really going to wait for that on Friday ahead of the long weekend. Moving on to the yen. The yen had a green session. Obviously, earlier today with those poor reads in Europe, a lot of pressure coming in the equity markets, and you had the safe haven bids in the treasuries as well as the yen. But the yen still remains below that 200-day moving average at 91.60 area. Now, we did neutralize our tone on the yen, the FX rundown yesterday after the market tested 89.97 and pulled back off a little bit. And we were neutral going into the FOMC minutes. We really see no edge in the yen at the moment. The equity markets are fixing to close pretty well right now. So you may not see that safe haven bid, but something to pay attention is that yields are continuing to back off. You got the 10-year prices up near 119.5. And it really feels like we're going to secure a close on the week back down below 3% in the 10-year. That all could be very supportive to the yen, but again, it's below that 200-day moving average. If you're looking to fade the dollar move, then maybe the best way would be to look at the Aussie and the Canadian. Now, you have long weekends ahead, and energy prices have been the hot topic, geopolitical tensions. We have neutralized our bias in crude oil after 72.35, our target. We've been very bullish in crude, but our target was achieved. Now crude has started to back off. We actually had a bearish EIA inventory report, and the market could not go lower in crude oil. This is actually an encouraging sign. Though we'd like to be buyers in crude oil closer to $70, but when a market cannot go lower on bearish news, guess what? That's bullish. Ultimately, though, you're starting to see reversals in the Canadian and the Aussie, the commodity currencies, as the dollar, though the dollar index may not show it too much, but the dollar itself overall has weakened. Remember that dollar index, as we said earlier, is about 57% the euro. So the euro is beaten up, but the dollar itself has weakened, and you're going to see that more in the Canadian and the Aussie. Now, they're not really quite at levels we love, but the Canadian, we like being long. If it holds at 77.90, it's trading right around there right now. The Aussie has some resistance around 78.5. It's trading right around there right now. Those are some ones to look at and take a shot. You've got stops below today's tails. You know, it's pretty simple there. If these levels, if this price action holds, this momentum holds, stick with the trade. You don't have to wait to get stopped out. Give us a call. We're here to talk about all this, currencies and more. 312-278-0500. The email is info@bluelinefutures.com. Remember to check our website for updates. And remember to sign up for a free trial of our research on our website. And also, remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thanks a lot.